Imagine trusting a bank with your life savings, only to discover they've been playing with your money in ways you never expected. Today, we're diving into 5 of the biggest bank scandals in history, scandals that shattered trust, rocked economies, and left millions wondering, can we really trust the banks? First up, Wells Fargo. In 2016, it was revealed that Wells Fargo employees had opened millions of fake accounts without customers' consent. Why? To hit ambitious sales targets set by top management. Customers discovered they had been signed up for accounts, credit cards, and loans they never requested, facing surprise fees and damage to their credit. This scandal not only cost Wells Fargo billions in fines but also led to a massive loss of trust among its customers. Even today, Wells Fargo is still working to rebuild its reputation. Next, let's talk about Goldman Sachs and the 1MDB scandal. Goldman Sachs played a huge role in Malaysia's infamous 1MDB fund, which was set up to boost the country's economy but instead was allegedly looted by corrupt officials and financiers. Billions of dollars disappeared, and as it turned out, Goldman Sachs was deeply involved in arranging the deals that allowed this to happen, reportedly pocketing enormous fees in the process. When the truth came out, Goldman faced hefty fines and a serious hit to its global reputation, sparking public outrage. Then, there's Deutsche Bank and its ties to money laundering. Deutsche Bank has been embroiled in scandal after scandal, but one of the most shocking was its involvement in laundering billions of dollars through what became known as the Russian mirror trading scheme. Essentially, Deutsche Bank helped clients in Russia transfer money illegally by disguising it as legitimate business transactions. The bank paid massive fines, but the scandal raised big questions about how banks handle and hide questionable money. Another major scandal was at HSBC, which was found guilty of allowing drug cartels to launder money through its branches. In 2012, HSBC was fined nearly $2 billion after investigators discovered that the bank had helped move hundreds of millions of dollars for drug lords and even for sanctioned countries like Iran. Despite being one of the world's largest banks, HSBC's compliance failures revealed a shocking lack of oversight, and people were left questioning whether profits had come before ethics. Finally, let's talk about Citibank and its involvement in the mortgage crisis of 2008. Like many big banks, Citibank sold risky mortgage-backed securities, knowing these investments were likely to fail. When the housing market crashed, Citibank and others were left holding the bag, and so were millions of Americans who lost their homes. Citibank was later fined billions of dollars, but the damage to people's lives and the economy was incalculable. This scandal, along with others from the crisis, led to a wave of reforms, but it left a lingering distrust of big banks. So, what can we learn from these scandals? Each of these banks was trusted with the public's money but failed to uphold the trust. Time and again, we see themes of greed, lack of accountability, and bending the rules for profit. When trust is broken on this scale, it's not just the bank that suffers, ordinary people pay the price. What do you think? Are these scandals enough to make you question the banking system? Let us know in the comments, and if you found this video insightful, don't forget to like and subscribe for more deep dives into the world's biggest financial scandals.